Trent Bradshaw, Brandon Rogers with Bradshaw Rogers Financial Partners and Mind Your Money. Wanted to bring you a market update. Today is December the 11th, 2023. A couple items we're going to touch on. We'll talk about employment. Some good news came out last week. Talk about the rates and where we're at right now and what the probabilities are going forward and how that may impact our decisions in regards to the overall portfolios. All right, let's jump right in. Last week, we got the unemployment numbers, and we actually had an acceleration of 199,000 jobs being added. And what happened was the unemployment number dropped to 3.7%, which was viewed as being a positive. The backside of that is that seems to be the necessary fuel that the Fed needs to increase or continue to increase interest rates. But what the market's looking at, they're calling it the Fed's bluff, basically. They don't believe that that's actually going to happen. They're still in the camp that they think rates are going to drop going into next year. So we do have an FOMC meeting. The Fed's going to meet on December the 12th and December the 11th, which is this week. There's about a 98% chance that rates don't go anywhere. And right now what the market's doing is interpreting that as being a positive. We saw a very robust market during the month of November. September, October, a little bit difficult, but all those losses that were associated with that have gotten returned during the month of November from that standpoint. We remain aggressive as far as the portfolios are concerned, but before I pass it off to Brandon, a couple other data points. If you look at rate cuts, based on the CME probabilities, it looks like the March to May timeframe might be the first quarter point cut that we see. And again, we look at that as being a positive. But by the election, November of 2024, it's on the table that there's a higher probability that we'll see 0.75 to 1 percentage points being pulled out of the federal funds rate right now, which again, historically is very positive for the market. So what has that done to our portfolios? What are we doing now as we move forward into the new year?
Yeah, so on the portfolio side of the equation, again, we are taking in consideration the Fed. The Fed's been the story this whole time, right? We keep talking about that.
Don't fight the Fed, right?
Don't fight it. It's still there. It's alive and well, right? So again, the Fed's, like he says, meeting this week. I think the Fed takes the things by meeting, right, and make decisions when the market overall looks at it and looks at it long term. So in the big picture, Fed's pretty much about done with the rate hikes, potentially, like Trent mentioned, the rate cuts, and that's a positive for the market. So that's what I think is really fueling this rally that you've seen in this past month of November. Going into election, obviously, we'll see what happens there. But portfolio-wise, keeping the straight large cap type exposure that we've got. We still have some protection kind of buffer type deals built into the portfolio.
Technology's in there though, right?
Yeah, tech's in there.
Okay.
Everything's there, right? So we are participating in the gains, and but also want to try to protect if something comes out of left field. But so far, things look pretty positive. That yield curve is kind of flattening out, which is a good thing. That's a good shift that we've been seeing, trying to get back to normal, right? So you're basically meaning your short-term money is paying a little less than your long-term. That's the normal yield curve, right? So you're starting, that's been inverted, which has been negative for the past while now. So we're starting to see that kind of flatten out and try to get back to normal. So again, that's all positive for the market.
That could be a positive for the bond market too, which we've avoided for about the last 2 years.
Yeah, so bonds are looking pretty nice now.
Yeah, bonds got some opportunity as we move into 24 and 25. So they may come back into the portfolio to some extent because there may be some capital appreciation opportunity there, which we haven't had in a very long time.
Yeah. So again, we'll keep you posted. So certainly reach out to us if you got any questions whatsoever. Again, thanks for joining us. It's Brandon Rogers, Trent Bradshaw for Bradshaw Rogers Financial Partners, and Mind Your Money. Take care.